Hey, Saretsky here. Welcome back to the show. Back in the saddle after missing last week. It's not often that I take a break. I've been doing this channel for almost 10 years. Over 1,000 videos now, over 40,000 subscribers. Appreciate your support, your patience. There's a lot to talk on this week because we missed the week. So I want to touch on the BC government tenancy changes. I think they're really, really impactful for capital allocators and understanding the bigger picture. This is something that I've always have in the back of my mind is government regulation policy is someone that's in the forefront of a lot of these conversations. Airbnb laws and data. We got data. We got Airbnb data. I'm going to walk you through some of that. We got the labor market data that just came out that's going to impact the Bank of Canada. It's going to impact bond yields. It's going to impact rate cuts. So there's a lot to touch on this week. But first and foremost, I want to touch on tenancy laws, regulations around tenancy. So you have this juggling act in sort of economies and cities setting tenancy laws. You have to protect the landlord, right? You have to have you have to have rights for the landlord, and you have to have rights for the tenant. And so kind of finding that balancing act is really, really important for having a healthy market. Not just for tenants, for having peace of mind and livability, but also for the capital market to deploy capital and build and invest in housing stock, because most of housing is owned by the private sector. So you have to have this balancing act. If you go too far in one direction, you get adverse outcomes. In my opinion, based on my research, I found that BC has some of, if not the strictest tenancy laws in all of North America. And so I think it's no wonder, it shouldn't be a surprise that we actually have, coincidentally, probably one of the worst rental markets in North America. We're chronically under a 1% vacancy rate. You get this, we're getting rampant inflation on the rental market as well. And so the problem is the BC government has continued to push in one direction. They've continued to change laws to favor the tenant because, the market's not great. It's hurting them. So we need to continue to push laws in this factor. And so I always pose the question, do you think you get more supply or less supply if you went to a private investor that had the ability to deploy capital and build housing? If you went to them and said, listen, we're going to cap your revenues below the rate of inflation. We're going to cap your revenues below the cost of maintaining the asset. Do you think you'll get more supply or less supply? It's a very simple question. And I think the answer is you'll probably get less supply. And that's really what we see in today's market. The laws that continue to push in one direction to favor the tenant. The adverse impact is it's great for existing tenants that are in place because they don't have to worry about moving. They know their rents are capped at, basically below the rate of inflation. And they have peace of mind and security. The problem is you get no churn. There's no turnover. People do not leave. And so what happens is it's great for the existing tenants, horrible for prospective tenants that are out there actually looking for rental housing. And then again, on the other side, it's not a great motivator or incentivizer to get the private market to go out and build housing, knowing again that your revenues are capped and it's getting harder and harder to get rid of problematic tenants. So what does the BC government do in their infinite wisdom? Because again, keep in mind, the BC government's trying to ramp up housing supply. They keep talking about housing affordability. We're going to fix it. We're going to change zoning. We're going to do this and that. We're going to get more housing. But yet what they decided to do is they decided to take what was a 2-month notice to evict a tenant is now requiring 4 months notice. They went from 2 to 4. So they said, well, listen, if you're, an end user, let's say you own a condo that you rent out to a tenant, you're putting it on the market to sell. We now require you to give that, and a new buyer who purchases it obviously wants to move in, they're end user. They now require 4 months notice for personal use. The problem is they didn't consult anyone. They just decided to implement policy in their infinite wisdom without chatting with anybody in the housing industry. And the problem is that you can't get financing commitments for longer than 120 days. Almost every single financial institution, every financial institution nationally, aka all of the big banks, will do mortgage commitments for up to 120 days. So, for example, if you make an offer to purchase here in August and you say, listen, I'm intending to move in, please give notice to the tenant, the clock starts ticking as of September 1st. So in essence, it's really like a 4.5 month notice period that you need to give the tenant. But you can get a mortgage commitment for more than 120 days. So what you're doing as the BC government is you're asking home buyers to take the risk and make a purchase without having a mortgage commitment in place. Why the hell would anybody do that? And who the heck wants to wait 4.5 months for completion or vacant possession? Keep in mind, our own mortgage insurer, CMHC, does not allow purchasers that are using their product, mortgage insurance, it does not allow them to inherit a tenanted property. You cannot inherit a tenanted property. You must get vacant possession. So if you need vacant possession and it requires 4.5 months notice, you can't get a secured mortgage commitment because it's too far out. They won't guarantee it. So if rates suddenly spike like they did, year and a half ago, and you thought you were going to borrow at 4.5, but all of a sudden the bond market moves up and you start borrowing at 5.5, all of a sudden you no longer qualify because you have to get re-stress tested. The deal doesn't work. So I put this tweet out on Twitter and I says, listen, I literally just had this conversation with a buyer and we've completely eliminated in our search any tenant occupied property because my client isn't willing to wait 4+ months to move in. And not only that, is not willing to take the risk for unsecured financing. Literally the next day, the BC government changes it from 4 months to 3 months. The next day, it goes from 4 months to 3 months. Now, again, I don't know why, because they had basically admitted defeat, said, oops, we didn't think this through. I don't know why they didn't consult. I've chatted with David Eby, I've had him on the show several years ago before he was elected. I've met with Ravi Kalan. I meet with policymakers all the time. I don't know why they didn't reach out. Not even to myself, just anyone in the industry. They not consult any bankers about how the lending system works in the province. And so that's number one. So we're going back. So we went from 2 to 4 months. We've kind of apparently found that happy medium. So that's number one. If you're doing a real estate transaction, that's the update there. The other thing I want to talk about is Airbnb. So again, the BC government, in their infinite wisdom, has basically effectively done a province-wide ban, more or less, on Airbnbs, unless, of course, it's your primary residence. Which is, in reality, it's like, okay, again, I look at these summer cottages. I've done the explanations on like a lake house in the Okanagan. Like, reality is it's not your primary residence. The reality is you're probably using it 3 months of the year and you're renting it on Airbnb the other 9. So that's no longer allowed under the regulations. And so I just said Airbnb needs regulation, but where finding that healthy balance of how much regulation it needs, I think is up for debate. And I think because you can run into a scenario where the pros, the cons outweigh the pros, which is like, how much are you impacting, for example, the tourism industry? Particularly, again, I look at wine country in the Okanagan. So we got some data from Stats Canada on Airbnbs. And this is showing basically people that Airbnb full-time. They're not their primary residence, right? Like, not like, hey, I went to Europe for 3 weeks, so I rented out my bedroom while I left. No, means like you have a secondary property that you rent year-round on Airbnb. We say, how many of those units are there? And so the data is from AirDNA, which is an incredible program. The data is crystal clear, okay? So there's nothing open for interpretation here. It's 100. So if we removed all of those units from the market, we'd get 107,000 new units back onto the market. And so people would say, wow, all at one time, 107,000 units coming to the market across Canada all at once. Of course, that would have an impact on pricing. Of course, assuming you took all the units and you dumped them on all at once, of course, you would have a one-time price shock. Now, the reality is that's not going to happen. You'd have people that would convert to long-term rentals. You'd have some people that sell, some people that might just leave it vacant. So that's not the reality of it. But I want to put things into context. 107,000 units, one time. It only happens one time, right? 107,000 units. we build in Canada about 250,000 homes a year. So this is less than half of the annual completions. You're only adding 1 year's worth of half of the annual completions. In fact, at our current levels of immigration, which is about 1.2 million people a year, it's about enough housing for 3 months worth of immigration. So if we added all the Airbnbs that are currently rented out long-term and brought them to market, it's about enough to house 3 months worth of immigration at today's levels. Just to put that into context for you. So again, I think Airbnb needs regulation. I think finding the balance of where that regulation should be, needs to be. I think it's certainly a debate that we need to continue to have. I think that we've basically gone one way, which is drop the hammer and just basically effectively ban it, is probably not the right policy decision. I think my issue is when you look at the data, I think it tells a different story. I think the government is looking for people to point the finger at. As opposed to taking responsibility, it's easier just to say, it's the speculator, it's the investor, it's that Airbnb guy, that's why you can't afford housing. There's never any person looking inwards. And again, I would just caution you earlier, the BC government set tenancy laws without consulting anybody in the industry, and it makes you wonder, did they consult anybody regarding the Airbnb stuff, aka some of the tourism sector? Maybe they should have consulted them. As we go into a recession, and as the tourism sector is already being impacted. So, which leads me to the next point, is you can see we're already entering this like soft economy. We're already seeing the slowdown. You can see it in the labor market statistics. So we got the data that came out for the month of July, second straight consecutive monthly decline in the labor market. So the labor market is contracting. So to put it into context, we added, this is per RBC, we added 125,000 new immigrants in July, 125,000 1 month. Then the labor market actually contracted. The people that are in the labor force contracted by 11,000. So you added 125,000 people, but you lost, your labor market's actually contracting. So this is not a good picture. This is not what you want to see for a prosperous economy. In fact, you can really see where all the hiring is. It was, we lost about 40,000 private sector jobs, and we added 40,000 public sector jobs. And you can see where this has gone really over the last 5 or so years, is all of the growth in the Canadian labor market has just been government jobs. It's just adding this layer of bureaucracy in government. I mean, if everybody works for the government, I mean, who do you tax? I mean, who actually produces and creates anything? If everybody just works for the government, I mean, what are we doing? And so I think this is really what ails Canada, is that we just continue to expand. We just continue to add these layers of bureaucracy, of red tape, and we just continue. The bloat gets bigger and bigger, and then we're just looking for more things to eat up. In order to sustain those public sector jobs, you have to basically raise taxes and basically crush the private sector even more. And so suffice to say, what I think this all means is that rates are going to come down further. This is another weak jobs market. Bond yields in Canada continue to drift lower. We're seeing in my mortgage channel 3-year fixed rates. You make a few good phone calls, 4.59, 4.69. So rates are coming down. Bank of Canada is going to cut again in September. And so people will say, wow, this is going to be so great. We're going to get this housing market's going to come back. And I would actually say there's, I think, 2 things here. I think what you're going to see is, yes, rates are going to come down. That's going to spur activity. It's going to get some people off the sidelines. I also think it's going to spur listings. I think we're in for a good dumping of inventory, of new listings coming in mid-September through October. I think we're going to get a lot of listings. We're going to have more sales, but you're going to get a lot of listings. So I think overall that negates it. I think you look at it and say, wow, yeah, rates are down, but the economy's going clearly into the gutter. You've got a high, your unemployment rate's up 100 basis points off the lows. I think we're in recession, 8 consecutive quarters of negative GDP per capita. I think there's still some more issues that we got to work through. And so I would caution people, because I hear it all the time in my industry. Sellers call me up and say, well, I think I want to wait till after the rate cut in September, because I'm going to get this big magical bump in my price. And I think that's pretty optimistic. I don't share that view personally. Like I said, I think we're in for more listings that are going to negate the bump that you're probably going to see from lower rates. But again, I would caution everybody: this is not a booming economy. We've got some issues to work through. So that's kind of my outlook right now. Continuing to see really poor government policy. It just you can't really make this stuff up. You just have to kind of, and this has been again a core thesis for me, is it's just, where do you want to deploy your capital? You can put it anywhere. And so I've just been really shy and nervous. I don't own rental properties in BC, and this is really one of the reasons I don't think it's welcoming of that capital. This is why I personally invest. I've got a rental portfolio. I build rental housing and rent it out stable long-term rental housing in Alberta, where my capital is welcomed with open arms. And so I think it's just this very slippery slope that you go down. And I continue to believe that housing starts are rolling over, will continue to roll over. The data that they collect on housing starts is significantly lagging. Again, think of a housing start. A housing start, a lot of the times you've gone through 3 years of permitting, of development plans, and negotiating with the city. And once you've already committed that, you've raised your capital, you got to go. You got to push. This is not something where you just say, well, I'm going to sit and stop and wait for better market conditions. Most developers aren't well capitalized enough to just pull back and say, I ain't moving. They have to push. And so housing starts are a lagging indicator, and new housing development will continue to roll over the next 12 to 24 months, regardless of if TIF maximum cuts in September or not. So, as always, hope to help, and we'll see you next week.